Hey everybody, Smart Silver Stacker here. Hope you're doing well. Yesterday, the gold market was plunged into chaos following a report in the Financial Times that new tariffs would be imposed on gold bars imported into the U.S. The gold futures market spiked up to a record intraday all-time high, and rumors and speculation abounded surrounding the import of these kilo and 100-ounce gold bars, which are critical for gold trading within the U.S. So we'll get to the bottom and discuss what's actually happening with tariffs in today's video. But this whole episode really illustrates how the gold market is just a coiled spring waiting for a catalyst. And when we look at the charts, I think you will see what I'm talking about. So let's get to it.
The worst day on Wall Street since the crash of 1987.
We're now down 43%.
This could be the most serious recession in decades.
Protect your retirement with gold and silver IRAs. Learn more at sdbullion.com/IRA. Okay, so let's start off just looking at the 1 hour chart of the gold futures market. Now, this is not the spot market. This is the futures market. So this is contracts traded on an exchange. In this case, we're talking about the COMEX. And that is where we saw the intraday futures price of gold spike up to an all-time high, a new record, $3,534.10. The highest these contracts have ever traded, following that report in the Financial Times that gold bars imported into the U.S. would be subject to tariffs. Now, clearly, as you can see from this chart, there has been a correction in the price of gold futures since this initial report. And this is why, because earlier today, the White House clarified that these tariffs would actually not be imposed on these 1 kilo and 100-ounce gold bars, that they are in fact exempt. Now, the confusion arose because originally a Swiss gold refiner inquired about tariffs, and they received an official letter from U.S. Customs and Border Protection stating that these gold bars, the 1 kilo and 100-ounce bars, the ones that are important for trading on exchanges like the COMEX, would in fact be subject to tariffs. But since then, the White House came out, they clarified, they said, nope, this is just a miscommunication. And this really demonstrates just how volatile markets are at this point in time, when one headline can cause these significant up or down swings to an asset. A little over a week ago, we saw what happened to the copper price following clarification regarding copper tariffs, and the copper price collapsed by almost 17% in the span of 1 hour. But there's something different going on in gold. So this is not gold futures. This is the gold spot price, which was not quite as affected by those headlines surrounding gold tariffs. But one thing you might notice about this chart is that gold has been consolidating in this symmetrical triangle dating back to March. And what we have here is we have lower highs and higher lows, and these two lines are converging, and very likely the price of gold is going to break out to the upside or to the downside here eventually. We're going to see a big move one way or the other, but which way is it going to go? That's the big question. The symmetrical triangles can kind of break either to the upside or to the downside. It just indicates that there's a consolidation and there's a big move ahead, but it doesn't really clue you in as to which way it's going to go. But that's not the case with these ascending triangles, which is where you have a flatter top and then the higher series of lows. That typically is interpreted as a bullish chart formation. And then the descending triangle here, that's the opposite. You have a series of similar lows but lower highs. That is often interpreted as a bearish chart formation, breaks to the downside. So how can we glean some information about where gold is headed? Well, let's look at that gold futures chart. And you might notice that this chart is a lot more like that bullish ascending triangle that we see on Investopedia. It's pretty interesting what is shaping up here with this big spike and a correction. Gold still clearly well within the uptrend. It's in the consolidation. It hasn't broken below any critical support or anything like that. We've just seen a lot of volatility over the course of the past day. But I think the real takeaway from this story is that this is a market that is looking for a catalyst to break out to the upside. And this chart formation tends to confirm that. So when we look at the gold spot price, I think that the odds of a breakout to the upside are much greater simply from a technical standpoint. And then when you examine the fundamental factors behind the scenes, the fact that we continue to see massive debts and deficits, we continue to see inflation creeping higher, the inflation which is largely underreported in the official government statistics. But, if you're out there consuming things, you know that everything is getting more and more expensive. And there's also the fact that central banks continue to hoard gold and buy it up. And I mean, that's kind of the smart money. They know what is likely to come next. There's a reason that for the past several years, since basically 2022, central banks have been snapping up gold at the fastest pace on record. Now, I want to take a look at another chart here. We've been seeing a lot of bullish activity in the gold and silver miners over the course of the past several trading sessions. And this is the chart of the SILJ Junior Silver Miners ETF. And you can see that since its inception back in 2012, it's been trading within this big consolidation range. We've got, again, kind of a symmetrical triangle formation here. And if you look, the price is butting right up against the top. We're looking at a potential breakout in the junior silver miners. And the other thing on this chart that I really want to draw your attention to is look at the volume data here. I mean, the volume data is very high relative to historic levels. And you see that since this ETF began putting on significant gains back in May, the volume has gotten much higher. Now, we haven't seen a huge breakout. I mean, it's in the green. You know, we've got this week, for example, the SILJ is up 15.6%. So that's not a small move. But when you consider the volume level here, what that suggests is that there's a lot of accumulation occurring. So that is what you would expect to see before a major breakout as smart money begins to snap these stocks up. And I interpret this as just another bullish confirmation that the metals are about to take off on their next up leg. Gold has been consolidating for months now. Silver has had some pretty good moves, but still it has been consolidating recently. And what we've seen is you get these big moves up and then a consolidation, big move up and then a consolidation, big move up and a consolidation. And right now, we had a big move up. Silver ran up to $39. We're in a consolidation again. And this is a chart we looked at yesterday, but it bears revisiting the long-term chart of silver. What we've got going on right now is that silver is butting right up against this top part of this cup and handle formation, which goes all the way back to the 1980 highs. And so you've got the gold market in consolidation looking for a catalyst to the upside. You've got the miners, now their chart looking incredibly bullish, looking like they're on the cusp of a breakout. And then silver is butting up against this major resistance at the top part of the handle of a 50-year cup and handle formation. And so all signs point towards an imminent, significant move higher in the precious metals. And maybe we didn't get tariffs on gold, but again, this is just a sign that these markets are looking for any catalyst to take off to the upside. This might have been a false start. Hey, that's great. It gives us stackers more time to accumulate, but the time to do so may be drawing near. Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.